So we got some great news for stock market investors as President Donald Trump issued an order on Friday reducing tariffs on beef, tomatoes, coffee, and bananas, a move aimed at lowering grocery prices for consumers in the United States, which are facing higher inflation and lower economic expectations. So I'm going to go over the details of this announcement and why I think it's such great news for all stock market investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Bloomberg reported that President Donald Trump issued this order to lower prices on grocery items, including beef, tomatoes, coffee, and bananas, which have seen prices increase meaningfully. The exemptions would reduce trade levies on these commodities, which the White House says cannot be produced in the United States in sufficient quantity to meet domestic demand. So the move comes as Trump has pivoted to focusing on affordability measures as voters are growing increasingly wary of the economy under his leadership. It's also an acknowledgement that the president's tariff policies have added to price pressures on U.S. consumers. And I've been talking about this since these announcements, right? Ever since the April announcements of these tariffs, I went on here and said, these are going to increase prices on US consumers, on US businesses. These tariffs were not going to increase prices on other countries. The other countries are not going to pay for these tariffs directly. They will suffer the negative consequences, to be sure. The tariffs on China and India and Latin America and other parts of the world have hurt their economies meaningfully. They are getting hurt. But so are US businesses and US consumers. It's kind of a move that makes everyone's situation worse. It worsens the situation here in the United States, and it worsens the situation for economies that are trading partners of the United States. You can argue that it's hurting those other countries more so than it's hurting the United States. And I wouldn't argue against you with that because I don't have enough information to determine who's getting hurt more, the US consumer, the US business, or the Chinese consumer and Chinese businesses, or Indian consumers and Indian businesses, or European consumers and European businesses, because I'm seeing the negative implications across the board, whether it's in Europe, whether it's in China, whether it's in India, whether it's in Latin America, or whether it's in the United States. I'm seeing the negative consequences of these tariff policies worldwide. And so a move like this to reduce some of these tariffs is good news for stock market investors and good news for US consumers because it will lower the prices on these imports. And if you're paying lower prices for necessities like groceries, you have more money to spend on non-essential things like going out to eat at a restaurant or going to a concert or movie theater. And your increase in economic activity will create jobs for people that are serving others in those categories. And that'll facilitate a nice upward trend for the economy, the opposite of what tariffs do, which is make everyone's life more expensive, and with the hope that at some point in the future, there will be more jobs created in the United States because the tariffs will make it more expensive to import products from other parts of the world. And I've said there is going to be some of that. There is going to be some incremental increase in US jobs as a result of tariff policies, but not by all that much. The categories where I felt that there was going to be an increase in jobs would be like, for example, if you had a manufacturing facility in the United States and you were producing at, let's say, 75% capacity, and then these tariff impacts go into play, and you see an increase in demand for your services, so you'll increase the utilization of your existing manufacturing facility. You'll produce more at your existing facility. But you're not likely to add another facility as a result of the tariff policy. You're just likely to utilize your facility a little bit more than you were previously. But if you were already manufacturing, let's say in China or India, and now you're facing this 50% tariff to import, that's not enough of a reason to move your manufacturing from China to the United States. It's not enough of a reason to do that because that kind of change has very long run implications. You're thinking 10, 20, 30-year implications, maybe even longer than that. But you're changing your business plans for decades based on policies from the current administration, which as a business owner, you're not sure if the next administration that comes in is going to continue the current plans or is going to reverse and change and cancel and redo all of these deals, right? Just like President Donald Trump is doing with the renewable energy type investments that President Joe Biden put into place. President Donald Trump has canceled most of those. That most famously, the EV tax credit was ended on September 30th in 2025. So businesses that made those long run plans to build these electric vehicle companies based on the fact of friendly government policy are now caught holding a bag and they don't know what to do. They don't have very many good options. And so businesses, or at least the prudent businesses, are not likely to make very long run plans based on government policy from a current administration because you don't know if the next administration will maintain these policies or change these policies. In fact, what you're seeing here is even the current administration is changing the policy multiple times in less than a year, increasing tariffs, decreasing tariffs, offering exclusions, taking away exclusions, etc., etc. So imagine you were a US business that started one of these businesses, right? So we looked at the categories. You had reducing tariffs on beef, tomatoes, coffee, and bananas. So let's say after the tariffs were announced, you thought, oh, great, there's tariffs, so it's going to be more expensive to import these products from outside the United States. So let me start a company that's going to produce and process and sell beef because it's now more attractive to do that in the United States because we're uh, announcing tariffs on everyone else. And then you fast forward to today and you see this announcement. Then you're like, what is going on here? I just spent hundreds of millions of dollars starting this business because you said there was tariffs on this product and now you're canceling tariffs on these products while I just spent all this money expanding manufacturing in the United States. So, business owners, business investors, most of whom are prudent individuals, are following this kind of policy, are unlikely to make any large investments because they're not sure if this policy will change, will be paused, will increase, will decrease. And so, what's happening right now worldwide, what I'm noticing, businesses are not making very many new investments in manufacturing. What they're doing instead is if they have a product category that's tariffed, they might just consider canceling that product. Let's say you're selling 4 different kinds of coffee flavor and one of them comes from a certain part of the world that's facing a higher tariff. You just say, you know what, my business is only going to sell 3 different coffee flavors now. I'm just canceling that one product. I'm just not going to do it. Maybe later I'll bring it back, but right now it's too much uncertainty, and so I'm not going to do that. And so the longer term ramifications are likely to take much, much longer, especially when policies are changing so much. The more policy change, the more policy uncertainty, the less likely you're going to have a business owner, an entrepreneur, make an investment decision that's going to have long term ramifications. And so reducing these tariffs, I think, is great news for all stock market investors. I agree with the president that there is trade imbalance, that other countries are selling lower priced products, are hoping that they can expand manufacturing and sell it in the United States because the US consumer spends so much money. The purchasing power of US consumers is so much greater than the purchasing power of any other consumer in any other part of the world. And so I understand the trade imbalance. That being said, I don't know if the longer term implications of tariffs will be positive. I don't have enough data to make that implication. And then in terms of the geopolitical, the national security interests, I'm completely unqualified to discuss national security and whether it's safer for the US to have tariffs on countries. Uh, I just don't know. So I won't talk too much on those longer term implications on national security. I can speak to economics and I can speak to business investment and stock market investment. And that's the area of my expertise. And that's the area I'll remain focused on. And these easings of and decreasing trade barriers are good news and great news for stock market investors. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in depth members only content.